All right, what's going on, guys? I hope you're having a wonderful Sunday afternoon. We're gonna go over some plays, and well, I'm gonna go over a quick play, but then talk about a broader lesson with selecting the best expiration time because I think I'm gonna show you a play with an example, talk about kind of the strategy, both risk management side, how I pulled it off, and why I did it, but then also selecting the best expiration. So you guys are new. We got stock market tutorials like this going over plays. There's the live streams, the stock market news, and then if you guys have been watching, I'm kind of liking this. I'm kind of getting into a schedule. I think we'll do those like vlog type stuff on the weekend mornings. Then we'll do cover the plays, but I need to find a way to select the biggest winners and losers on the weekend because I still have so many plays to go over. But even going over that Amazon YOLO, that took me 18 minutes. So I'm going to try to be as terse as possible with this, but I do want you guys to understand because all of these plays you guys are seeing, everything on the channel. Oh, I need to make that video where the markets are going to shift here. So you guys have to start seeing, different times to play options and different ways you go about doing it. So don't, and that's what I'm trying to say is sometimes, we might approach a period here where waiting and letting the premiums kind of balance out again might be something. But again, too, like tlry, this is the play I made. This was running up on something. I made a video on it a few days ago. They had the Budweiser deal, so I'd watch that. I talked about this into the weekend. I flipped the daily contracts again. These were the weekly YOLOs. And if you didn't watch the last video I made yesterday, 150 bucks to 1800. These daily contracts are risky, and I know Valentin. I love this guy, man. He's been on the video. Shout out Valentin, man. I love you, man. Appreciate you subscribing and always commenting and being active. And he even said he's like, I appreciate you being honest with us about this. It's not about just I want you guys to make money. Hopefully, I think people are a lot nicer if we're making money, but at the same time too, I've just seen so many people blow up accounts playing short duration contracts. So that's where I want to talk here. Can you make money off them? Yes, but it's the floor is lava. It's very dangerous. Do not try to make this a big part of your strategy. Again, you should see the cars I'm shopping for right now. You should see the house I just got and notice the amounts of money I'm putting on here. Some people like to play big with this, and some people, I know people play $50,000, $100,000 hands of blackjack. So it's up to you on this, but this is dangerous. So please do not underestimate that. And when I'm even sharing you, I'm just telling you guys what I'm doing. This is how I look at my contracts. I'm not saying you should do this. So I'm going to share some, I'm saying they're my rules of thumb, but that's exactly what they're. They're my rules of thumb. This is how I'm looking about it. That's the point of the streams and all these videos. Take the insight from me, see how I'm going about making these plays, and you guys will be able to form your own strategy from it and be able to mix and match. Like I'm saying, heed some of the warnings and take what you like is good, and you guys are going to see what's working and what isn't. And like I'm saying, what I look for in my thing, I look to what works. I like to look at the people who've done stuff, and that's why I'm saying, coming back to this, I'm more modern. I'm younger. I'm with my level of wealth, I could allocate to some of this, but this isn't a viable way to build wealth. So hopefully you guys understand that. But I played this play and we got in like 148, 149, like really right at the top candle. So we're watching this and I have a play on it for next week. I have the 81. I'm going to look at it Monday. Part of my strategy. I bought this contract bad. I ended up on it a little bit, but I could have got it better even with this one. But what I did at first, I bought the 76 contract. I wish we could see it, but they've already expired. But I got the 76 call for 30 cents. I bought two of them. Yeah. So I got two of them for $60, right? And then I waited. It seemed like I waited longer, but then I got the 65 because this got cheaper actually. And then I was going to average down here, and I should have because this is again the danger with these dailies. I talked about on stream velocity. Whenever there's velocity on the shorter contracts, they're going to spike up a lot, and it's very tempting to buy in. I got it on, I did it on there. I was going to average down, and I had my opportunity. I even said it on stream. I thought it was going to come down lower off these pops, but I usually scale in small to get in. But again, 60 bucks. And then I put another 60. So 120 on a daily expiration. That's a lot of money. Again, this is a complete YOLO. Like, think about the size of your account. This is not something a lot of you guys would do. Again, learn from it and see me. And again, because at the same time, here's the thing. Some of you, would I do this with one contract, 30 bucks? Probably not. When you play some of these dailies and weeklies, and again, shorter, this is the contract thing, shorter duration contracts, you could get one of them, but even in general, what I have made mistakes on is spending too little, or is spending too little with too little of time. If there's one day and you're spending, getting one contract, unless it's really close to the money, it's not going to hit. But like that Amazon one, there was a day left on it after the move. You could kind of maneuver with one contract. The bigger price contracts, you could get only one. But if you guys are only buying like one $15 contract, one $20 contract, unless you're on Robinhood or Tastyworks and have cheap commissions, I wouldn't recommend it, because even if you made 50%, you're going to make $15. So it's not worth it. But this one did go up a lot. And, and that's what you guys could see. I think I tried to get another one. I got the weekly, the 134, and this is what we're going to explain. But then it went up to 217. Where's 217? Literally the top candle here, right about there. I sold. I was like, all right, it's up. I want to get out. And I sold one of this. I sold the first 75 I bought for 65 bucks. I sold it for 219. So that's like 100 something profit. But again, I only put 120 in on these and then 130 there. So it's like 250 bucks, right? I got 220 back. So now I sold that. I have 220 back. I'm really only now total out there 30 bucks, and I still have these two contracts. And then I waited about 2 more minutes and I sold one of the 76s for 130. So now covered the 20 bucks. I'm up now net $110. So think about what's happening. And this is how I'm looking at these plays as well too. Money in versus money out. This is basics of business, my guy. Income, expenses, profit. I did 250 out, brought in 220. So now we're only at a negative 30, right? And then we bring in the 130. We're hitting that $100 profit net. So I've got all my money back plus an extra 100. But what's the difference? I'm holding this contract, and I held it. I could have got an extra 100, cashed out 200 bucks profit, put in 100 bucks total, or 200, and came out 100. Probably could have got better, but then I remember I still have this. I let this one expire worthless. Who cares? I held it. That's the point. I don't know if I made it clear in the last video. I like to get these multiple contracts. I let the house money ride. That's how you're able to maximize it. A lot of you cut winners early, and that's the thing. This is a finesse. I'm telling you, I'm giving you this advice, but sometimes I fucking hate it just because I'm like, why would I? It's my money, I had an extra 170 bucks. Like I should have took it, but I, stock like Tilray, I'm not. Just even like Amazon, I let it hold when you guys were telling me cut out at 600, just because I know the potential of what it could do. But this one didn't have time. So that was potential versus time. This was very, very gambling. It's very difficult, honestly, especially the last day. You're better off more often than not taking it. But then again, if that went to $1,000, that would have sucked. But here's the thing, I'm still holding this. I never sold this one yet. I'm still holding it. It's about break even. The spread's large, but that's where I'm holding now. So here's the question. I got the 81, I got it for 130. It's there on the bid, 170 on the or 115 on the bid, 150 on the ask, 130 last trade. I could have got it at a better time, but it's like, why did I select this now? And here is that rule of thumb I'm going to get you guys to selecting the best contract time. And what it has to do with is the time left on the contract, and it's related to your guys' budget. So if you want to spend a little bit amount of money, you're going to go short duration, but that has more risk. It's going to be harder. Just literally more risk means increasingly more difficult for you to make money. The more harder it's going to be, the higher chances of you doing 50 bucks to 200 or $300. But the easier ones are going to give you less money. That's just how it works. It's like the carnival. Literally, just think of the options. This is the carnival. These are your fucked up basketball hoops on a 50-foot rim with a bouncy ball with Shaquille O'Neal trying to block you. If you hit it, you put in $1, you're gonna cash out. These ones, February, the further you go out, you get into a few more months, it's gonna cost a little more to play, but it's easy. It's just throwing a dart, popping a balloon, or I haven't been to a carnival in a minute, so but hopefully you get the idea here. But my rule of thumb is, if it's a shorter duration contract, that means I'm going to go for something where I could get in the money, or it's a stock that's going to move a lot. So Tilray, Amazon, even low float stocks. But if I am going to go for a longer duration contract, that's going to be now something out of the money or more out of the money, where I could make money even off selling the premium, or it's giving me time for that position to build up and I could sell it. But hopefully you get what I'm saying is selecting the best contract is going to be dependent on what you want. But essentially, you would go for if you think you know where the stock is going to move and you think there's going to be a pretty much an immediate move, you go short duration. That's what I do. I'm not saying you should. That's what I'm doing. I like to aim in that direction, or I'm thinking when I am getting short duration contracts, this is where a lot of you mess up. Just make sure if you do a short duration contract, do not get too far out of the money. That's where you guys are like, oh, it's cheap. But if it only has a 2 days, you're literally just buying something statistically, and it just would never hit. Like nobody buys it for a reason. Like those are just they're like really weird anomalies. They just have to be there, and if you buy in, it's a head scratcher. But look at though, and the point I'm trying to make with this and why I want to explain, because you'll see now selecting the expiration and the strike prices, like let's look at even the SPY or like the UVXY. Like if you look at the puts or calls, like or even I think Facebook's a good example, because and I've talked about this and I said you guys should just focus on 1 or 2 stocks. This is a good one. Don't, people are getting confused. I'm just looking at Facebook. We have reasoning and logic behind it. But now let's look at like the puts, right? Even though the stock is clearly, it's been going down. Oh no, they added to the chain. But like here's like the January 18th puts, and what you'll see, it's like what I showed you guys with the VIX. The stock's lower, way lower. It's actually, the stock was lower here and the price was higher. It's actually higher than here. And it makes sense why this put would be cheaper. But there's times where you're like, okay, well, the stock was here. The options were a lot higher. I think this one is because 130 was in the money. But let's see, and that's what I'm saying. You see how these now, the options near the money, it was below 130. That's why it was at 126.23. It had intrinsic value. That's why the option price, you see it reflects the put. Stock goes down, the option price shoots up, more expensive than it's ever been. But notice the further you get out the money, we have to probably go to like a 115 because they added options. That's what I'm saying. Once it dropped lower, they filled the chain up. I'll make another video kind of discussing that. But you see, this kind of did it. You do see this even in 115s. I think we got to go 110. I want to show you because even then you're seeing now, now it dropped lower, but this drop isn't there. And even the next drop's lower. It was progressively lower than what these puts were going for. And even now it's still dropping. But these puts don't go up as much, and it's because they're out of the money on a shorter expiration date. A month ago, they had more time. A month ago, these were like the February contracts today. That's what I want you to keep in mind. So even when you see this up here, with it having less time, being at the same price as it was a month ago, this contract's technically more expensive. So this is even how to understand pricing of the options. So let's go to February. Go February and March now, and you'll notice the out of the monies, they held their value a lot better. Here's November and October, but you go to the 115s and other ones, they held. If we go June puts even, now these are obviously we're going to be more expensive, but now they're holding their value. You see, but now what's the difference? They didn't appreciate as much. These went 300%, and that's it. Whereas the January 18s, you look at those like 100s, we could look at the 110s here. These went from 20 cents to $2 back down to 60. That's 1,000%. Whereas those June 110s went from, $2 to $7, which is what, 400%, and back to 400. But see how they held their value. So if you want to go out of the money, you get more time. If you want to go near the money, it's less time, but then understand why. So don't get cucked by your budget, forcing you to get a bad play. And that's what I'll talk about it in another video, but you've heard me. It's like, understand your options. Like, well, can I put 300 here or $100 here? What would it get me on this duration? Or if I spent, this much more money out, how much more realistic is that to get this much more amount of time? But that's pretty much it. Hopefully, if this was too confusing, I hope it wasn't. But if it is, go the stock trading course below, ask questions, we'll clarify it, we'll go on the stream. But, just keep watching the videos. It'll make sense. Let me know your guys' questions on it. Hopefully this helped to some degree, and be smart. Think. I want you guys to think every day while you're trading, shop. This is what it is. It's just shopping. Chill out. I think a lot of you too, there's big opportunity here every day in the market. It's exciting, but let's slow it down. Just chill out. I think, and you guys will see, you just got it sniping. Make the right play. It'll come to you. That's why I say in paper trade, you guys will learn and play around with this. And once you get a better feel for contracts, I've done this so many, I've traded millions of dollars of contracts. I've stared at these for hours, over 10,000 hours, I want you guys to get a feel for these, and that's what I'm saying is really going to help elevate that trading. But you're going to start picking up on these little tricks. So hopefully I saved you some time with that, but experiment on your own. Go look at your past plays, go look which ones were successful, which weren't, and notice the expirations. And like I did with those past bowling plays in those videos, go review, go see what your alternative options could have and would have been. So yeah, that's pretty much it. I love you guys. Stay in school, subscribe, like the video if it helped out. Get ready, man. Tomorrow's gonna be exciting. Peace.